Hey guys, welcome back to the Financial Experiment. We are live and looking at my Q3 earnings for 2020 here in Fundrise. It's been a while since I've done a video for Fundrise, so it's about time we jump right in. Let's look at the dividends. Because this Fundrise account, there are three major groups you can fall into. You can go into a growth account, a supplemental income account, or a balanced one. And I've opted for the supplemental income because I wanted to see large dividends right off the bat. I was a little impatient, and I did add a couple of investments that were for growth investments, and they have increased the amount of return that I've received. But overall, this is a dividend or supplemental income portfolio. So let's see. It looks like in Q2, at the height of the coronavirus, the dividends were dropped from $42 to $30. So that was a drop of about 25%. Was it? Yeah, that was a drop of about 25%. Maybe I'm wrong. I'm not a mathematician. But now we're looking at Q3 and we're seeing the dividends start to come back up again, which obviously it's really nice. Looking at the chart here, we still see that there's very little volatility in what happened. And again, maybe it is your first time checking in on me, but this little thing right here where the stock went down, or not the stock, the chart went down a little bit, was because I took out my dividends. I had the dividends deposited into my bank account and not reinvested, like you saw here and here. So how does this compare to other REITs? Well, it depends on which one you invested in. If we look at, for example, something like Annaly, where I started investing during the coronavirus, it's up 7%, and I've been buying it heavily since then. I'm about to get some dividends of like $70, which is already more than what I'm getting here. The dividend yield here is 13%, which is crazy. However, I do have a lot more money here. Wait, no, I don't. $2,290 versus $2,400. Wow. So I actually have more money on Fundrise. I just assumed that I had more money on Annaly because the dividends are so much bigger. Holy heck. So on a $2,300 investment on Annaly, I'm getting $70 dividends, whereas on $2,400 I'm getting $35. That's half. And then on top of that, I'm up almost 8% on the stock itself, or the REIT. That's interesting. I thought it was going to be a lot more even, to be honest. But I guess I was wrong. Let's look at some other stocks like MFA. Now, this is where you kind of start to see the value of Fundrise, in the sense that you're not going to be looking at something like this. It's very unlikely that your Fundrise account is ever going to look like this. It's a much safer place to put your money. Of course, the safer, the less returns, and the higher the risk, usually the higher reward. With MFA, I'm up 20%, which is really good. I don't remember exactly. Oh, no. Yeah, my average cost per share in MFA was around here. It was like a $7-8 average cost per share. But I did buy more while it was down, even as low as like 80 cents. I bought a couple of shares of MFA at 80 cents because at that point I was like, F it. If it's going to go back up, it's going to go back up. But if it's not, I might as well add a couple of 80-cent share, right? It's not going to make me go broke. And the dividend yield, also, let's see, how much money do I have here? $2,300. Okay, so this is a lot closer to what you find on Fundrise, where I have $2,400 here and $2,300 here. Well, we can say it's about the same amount of money. However, my dividends here are $42 versus $35, almost $36. So MFA even still beating Fundrise as far as dividend yield goes. Of course, volatility is a whole different issue, right? You're looking at this versus that. So if you're a new investor, you might want to look into Fundrise and not a REIT, which may be volatile, especially in these times of uncertainty and such a unemployment, such a large unemployment rate. Realty income, I did sell off a couple of my shares. Their dividend yield is about 4 or 5%. Here it's sitting at 4.5%. I'm up 9%. That's not as big as I thought it was, but I did sell off some while it was a little bit higher. Yeah. Which still, if you're looking at a return of 9% for a REIT in a couple of months, I don't think I'm getting a 9% return on Fundrise. Of course, you have to know when to buy and things like that. You have to kind of time the market a little bit if you're looking for returns and not dividends. Which, obviously, you're probably looking into dividends if you're using realty income. Looking at this though, I'm down 7%. And this is because I bought it literally a month before the whole stock market crashed due to the coronavirus. I'm still getting dividends, but when you compare that to Fundrise, again, in this case, Fundrise does outperform the S&P 500 high dividend low ETF only because I did not continue to add to my position while it was down. I saw better opportunities elsewhere, so I decided to invest my money in other areas. I'm sure that if I had added to my position while it was $27, I might be at a profit by now, but there were just better opportunities out there which I wanted to take advantage of. So looking at the growth here, we go from, let's see, this is Q4 2019 was $33, Q1 2020 $42, a nice bump, Q2 2020 a decrease, a significant decrease, and now Q3 2020 as things start to normalize again, we're starting to see the dividends become a little bit higher. And that's about all I've got for Fundrise. It's a quick video, just a quick little update on what's happening with my dividends. Thank you guys for watching. If you liked the video, go ahead and give it a thumbs up. And put a comment down below if you want to tell me that I'm a jerk, like I usually get. And thank you for watching. I'll see you next time.